Ladies and gentlemen, apes and ape bets, welcome back to the channel. No matter what time you are watching this video, thank you guys for tuning in. This is a particularly interesting video, I think, for a lot of people because we are talking about this concentration in the markets, really with AI-driven companies that seems to be faltering a little bit, or at least close to faltering a little bit, that could spark a collateral crisis, as JP Morgan puts it, or just flat out margin calls. And this could affect stocks such as GME, stocks as AMC, or many other names that you might be looking at as short squeeze kind of trades. This can have a very big impact and can crush a lot of the liquidity out there, guys. So let's get into this video. First things first, I want to point out the obvious here. AI has been a highly talked about topic of discussion. It's clear AI is going to be around, whether you like it or hate it, whether you think it's going to take away jobs or not. It's going to be around. And some quote unquote experts are predicting the market capitalization of AI could be almost $16 trillion by 2030. For comparison, this would be a bigger, I don't want to call it benefit because who knows, but this would be bigger than the iPhone. Let me repeat, this would be bigger than the iPhone. Imagine what the iPhone and phones in general have done for your life, right? A lot. Artificial intelligence could be much bigger than that. So for those reasons, these artificial intelligence companies, which are the largest companies, ironically enough, the largest companies in America, they've been the one to benefit from this the most. Stocks such as Nvidia and Microsoft, just today, hitting new 52-week highs. Nvidia is a $750 billion company that is grossly overvalued, that is expecting massive future growth, which they'll probably get that growth, but it's probably going to take a lot longer than Wall Street will like, right? It's not going to happen overnight. And there's one particular catalyst that, in my opinion, could start to topple this AI bubble that we are seeing in the markets. Microsoft, a behemoth such as Microsoft, $2 trillion valuation, is up 45% from the start of 2023 based off of what? Not their cloud, not their software, not Azure, nothing to do with their core business. It has to do with hype around AI because their core business, Nvidia, Microsoft, Apple, all of the largest companies are down year over year. So what's the big deal with AI? Well, like I said, long story short, it's going to take longer than Wall Street expects. These earnings are not going to come overnight. And with a consumer that is slowing down and the prospect of a recession looking closer and closer, this could be a short-term massive bubble. And if we take a look at this chart in particular, I think this one very accurately represents what's happening in the markets. This line right here, this blue line, is the ADL line. Stands for Advanced Decliner Line. It's essentially the breadth of this market. In a perfect market, if this is the NASDAQ, if the NASDAQ goes higher, this blue line should also go higher, meaning that when the NASDAQ goes up, most NASDAQ stocks also go higher. Well, what you have seen as of recently is the NASDAQ going higher since May 1st. The NASDAQ has went considerably higher, but the average NASDAQ stock has actually fallen quite a bit. So what this means, and let's long story short this for you guys, is two things are going to happen. Either big tech comes down and falls alongside the stocks that have already been falling, and they match up and then they rally back together, or in the most bullish outcome, your small mid-cap stocks, your average NASDAQ stocks start to rally. Now, why would they start to rally? Well, maybe it's the Fed pause. Maybe it's inflation coming down faster than expectations. Maybe it's avoiding a recession, things that look almost impossible right now. So that doesn't look like the most likely outcome. The most likely outcome is that some point over the next couple of weeks, the NASDAQ, or aka the biggest companies in the world that are benefiting solely from AI, that has literally pushed these companies up. It's only AI. Let me be very clear. AI is the only thing pushing these companies higher. Those companies will start to fall and cause the markets to fall quite dramatically. Now, what this breadth, or the weakness of the breadth, is showing you is that money is being concentrated in these large players. This is reminiscent of the crypto bubble in 2017. The devil's lettuce bubble as well in 2017. Biopharmaceutical stocks in 2020 or 2019. Different bubble-licious phases we have had in the past. But this one is on a much bigger scale. This one is adding hundreds of billions of dollars of market cap to these companies. The green lettuce, biopharmaceutical, none of those bubbles, crypto bubble, none of them added this much value to companies so quickly like the AI bubble has. And again, I'm calling this a bubble because the expectations are way too high, that are not going to be delivered on anytime soon, and eventually the markets will realize that. I think sooner rather than later, could take longer, but this right here is showing you the concentration in the markets. Now, this can lead to a collateral crisis as well as just flat out margin calls, because when your money is concentrated, if you're a hedge fund, if you need to have capital available and your stocks fall, you're going to have to pledge more collateral to short positions such as AMC, GameStop, these other heavily shorted stocks. You're going to have to put more collateral up. If your money is dissolving out of thin air because you were a part of this AI bubble that has caused Nvidia to go up 180% from its lows. Again, Microsoft 45%, Google 45% from its lows. Well, your money might just vanish. Your money might just be gone. And that is a very big problem for hedge funds when this actually does play out. So that's kind of what I'm looking forward to. Now, JP Morgan has called this out already, right? We talked about that a couple videos ago. But I think a big catalyst for AI specifically for this market might actually be NVIDIA earnings that will come out next week on May 24th. This could be a buy the rumor, sell the news kind of event where AI driven stocks, basically your top dogs in the markets, rally into NVIDIA earnings next week. And then people realize, like, hey, maybe this is way too premature, that maybe the music is going to stop pretty soon and we should get out of these stocks. And that's when the ultimate collapse of these names will happen. And I think, again, NVIDIA earnings will be a big catalyst for that. If they're not, then this bubble is going to get even bigger. Right? Imagine that. NVIDIA has rock solid, stellar earnings, and this bubble gets even bigger. It's going to make that ultimate collapse even harder. But nonetheless, that is a catalyst. Now, again, another catalyst is actually going to be Friday. And tomorrow you're going to have a couple catalysts as well. But Friday, you're going to get Fed Jerome Powell that will be speaking with Ben Bernanke. We talked about this in one of the last videos as well, but I think this is very important because the markets have been disregarding what other Fed speakers have been saying, but they tend to listen to Fed Jerome Powell more, right? They tend to kind of respect what he says more. And I think he's going to reiterate the same thing other Fed speakers have also said, that higher for longer, no rate cuts, economic activities doing fine. The risks are that inflation will continue higher. We've heard Fed speakers say this over and over again. Markets have not reacted this week to Fed speakers at all. They've reacted to the debt ceiling and continued to go higher off of AI hype. Now, don't get it wrong, I'm not a AI bear long term. I think there's definitely going to be a lot of opportunities, but you gotta weed things out here. You gotta see things for what they are. It's not going to happen so quick like people expect it to. So when you put these couple factors together, the broad markets don't look very appetizing right now. Now, coming tomorrow morning, you're going to get the initial jobless claims. And why this is important is because last week you've seen the first uptick in initial jobless claims, and the labor market is the last market to actually falter here. You've seen other, sectors and markets do bad. This rolling recession remains a topic of discussion, but the employment picture has remained very strong and healthy. And employment's like a snowball rolling down a hill, right? Once it starts, it's hard to stop. And once you stop it, it tends to break. And that is the labor market to a T. So ultimately, that will start to play out. Now, what we seen yesterday was retail sales coming out. And retail sales were actually positive on a nominal basis. But if you actually look at retail sales on an inflation-adjusted basis, retail sales have been falling precipitously. Like, constantly, they have been falling. If, I don't believe this is actually gonna have it. No, this one don't have inflation adjusted. I don't see. No, I'm not seeing it right here. I would have to pull that chart up for you guys. But it's been a downward slope. Like, the trend is obviously there that consumers are not spending as much money. So, when you add these factors together, I'm not very optimistic about this market. And I don't think there's a huge bullish case after this rally in the market to be bullish. And I think ultimately, when these large tech stocks do fall, it's going to put a lot of pressure on shorts and could really help make some of the moves in AMC or GME much more dramatic. Same thing like Volkswagen in the bottom of 2008. Liquidity had dried up. That's why you've seen that squeeze as aggressively as it did. And I think we could be walking into something similar. Now, I'm not a financial analyst. I'm not a financial planner. I'm not a financial advisor. So I'm not going to sit here and say this is all with certainty. But this is what makes sense to me. Let me know what you guys think about this down below in the comment section. What do you think is the catalyst to poke and pop this AI bubble? Or do you think this is not a bubble at all? Do you think earnings are going to start to material in like the next couple of months? Like, is this a thing that is here? From what I've heard, nobody knows how they're going to monetize AI yet. People are just creating it, which is fine. But to add hundreds of billions of dollars to market caps because of that doesn't make a lot of sense to me. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.